I was talking to a friend of mine yesterday, and we were talking about the stock market. And, we started going into, investing and finance and, what COVID is doing to the economy. And anyone who knows me knows that I love finance and the stock market and all that. And one of the questions was, how does unemployment correlate to, the economy, right? And you can talk about it, but I was like, let's look at the data. Let's actually see. So we grabbed some data sets, right? So this first data set is what's called the S&P 500. Now, if you know anything about the stock market, you'd know straight away what S&P 500 is. And it's basically the top 500 companies in America, right? So if you invested in all 500 companies, right, how much will you be worth over time? So basically, on average, if all companies in America are doing well, are being profitable, right, then the stock market goes up. And if they're all crashing, like we saw during COVID, well, then they all go down, right? So S&P, it's a good kind of guide to see, well, is the stock market good or bad or what's going on? And you'll see that during the 2008 financial crisis, it went down in the year 2000, where you had the internet bubble. You'll see all these events where it would cause the stock market to crash. So I wanted to see that. And then I also downloaded the unemployment rate. So in terms of doing an analysis, I thought it'd be great to show people how I go about it, right? So the first thing I do when I'm doing analysis is basically, what do I want to see at the end of this, right? So before I've even looked at the data, what am I picturing in my head that I want to see? Well, I'm going to see a chart like this, right? And you're going to have the S&P 500, the stock market doing one thing, and then the unemployment rate, which we expect to be going the other way, right? So let's see, green, it's going the other way, right? Because as people lose their jobs, the economy suffers and it kind of goes one way or the other. So I'm thinking line chart. So when I think of line chart, I want to keep that in mind as I'm preparing the data, right? Which means I have to have both data sets on the same time scale. Now it's a little bit difficult because if I go in here, right, this is the date that I have for the S&P 500 for the stock market. And this is the date I have for the US unemployment rate. You can see there are different scales, or what they say, different granularities. This goes all the way to the day, whereas this one is at a year level. So what I have to do is I have to get them on the same scale, right? Because I want to put it on that line chart, all right? Oh, hang on, let me put that in red. My dogs are losing their mind, right? I want to put them on the same time scale. Now, if they're not on the same time scale in the data set, well, I can't get them on a visualization, right? So that's my first step, and I'm going to use Tableau Prep for that. And I'll show you how I transform it from this scale or this scale, vice versa, okay? So the first thing we're going to do is going to load up the data set. So we're going to drag and drop those two things. And one little tip, make sure you label your files, right? I see a lot of people just have, file number one or copy one. And what happens is when you get to the Tableau Prep stage, you can get confused of which file's which, and you start getting confused of like, oh, how come that field isn't there, and so on. So be very clear about what data set is which. Come on. All right, drop that in there. And the US unemployment rate. So we drop that in there as well. All right. And we're going to have a look. And the first thing one of the things I do is I just have a look, make sure that, it is what I recall being the data. Yeah, this looks about right. Step one, get rid of anything you don't need. So I'm going to do two steps here. All right, step one, and I'm using, I think this is the new version of Tableau, 2020.2, right? So there may be a few different things here and there. All right, I'm going to get rid of anything I don't need. And instead of doing it this way, I'm actually going to do it at the stage one, just because it's a little bit cleaner to do. And we're just going to get rid of everything. I just want the closing price. So that's basically the price of the stock market at the end of the day, all right, or at the end of the market on that day. In this one, we're going to do the same thing. We're only interested in unemployment rate and year. Okay, just those two. So let's see what we got. Those two, and let's change it to detail because I want to see on a point-by-point basis. Okay. That's just for me to start getting familiar with the data. Now, because I'm doing a join, one of the things I always check if I'm doing a join is, are there duplicates, right? And also, how many values do I expect to see at the end of this join, right? Oh, and the third one is, what kind of join will I need? All right, so there's a little bit of testing involved. And some of it you can kind of tell straight away. All right, so what kind of join am I going to need? Well, straight away I can see that this is 1,000 dates, right? 1,000 individual dates. And this one is only 91. So I can already see that it's most likely going to be like a left inner join or something like that. Because if I do just the inner join, it's only going to be where the data matches. And I may not want that, but let's see. The other thing is I want to check if there's duplicates, and that's really easy to do, which is if I go here and go aggregate, I can bring in year or the date, right? Like so. And then I can bring in the number of rows in the aggregate. And what that's going to do is going to count the number of times each record exists if it's a duplicate. And you can see the only number is 1, which means there's no duplicates. The other way you can check that is if you come in here, a little tip. This represents the maximum value, this point here, right? So you can see how this pattern is different, right? If I go in here and resize, you can see this value exists several times. If I do keep only, you can see there they are there. Different times, but the value is the same. I can do the same thing for dates, so that if this is a really even shape, as you can see, it means everything exists once, right? So you can actually know that without having to do the aggregate. So if I go clean 2, you can see it's the same pattern, all right? But for data that I don't really know, I will still do the aggregate just to be sure. All right. So now that we know that that only exists once, we now have to get them on the same time scale, because if I do a join, right, date on date, it ain't gonna work. All right. See, nothing happens. Why? Well, firstly, if you look at this, this is a number, this is a date. We've got to get them both as the same data type, and then both the same scale. All right. So let's go in here. We'll get rid of this. Let's get it first to the same data type. So we'll leave that at number. And here we need to extract the year out of this, right? So let's do that. I'm going to do a calculation, right? I'm going to go date. Now, it's been a while since I've done formulas, so hopefully my memory is still good, right? And we're going to grab just the date out. Now, why didn't this work? Unknown field date. I think, right, okay. So it has to have the square brackets because it's a field, right? And we go save, right? Now, it just replaced the old one. I actually don't want that because sometimes I want to check and make sure the formula is doing what it's supposed to be doing. So we're going to go back in. We're actually going to call this date 2, oops, for the time being, right? And what I usually do is I will do a check, right, here and there, and just make sure it's actually doing the correct ones. So you can see down here, and what I'm checking for is 1933, 1933. And I'm just basically doing spot checks, just making sure it's doing what it's doing. All right. All right, now that that's correct, I'm going to switch this now to date and just replace the old one. Okay, now the problem is if I go here in 1928, there's multiple values. So it's still not at the same level of detail or granularity as the other one. So what we're going to do is for each year, we're going to take, let's say, the average value in that year, right? Or maybe average or median. We'll see. Let's see. Maybe I'll do median. That's probably better. Is it? Maybe average. I'll do average. I can always change it. So let's bring in the date, right? So here we're going to see just one row for each year. And then for the close, instead of sum, we're going to do, let's do average, right? And if I output this, you can see that we're back to just having one row per year, right? And we have a lot less data now too. You can see there's only 94. Well, why? There's only been 94 years of data, right? So you can see here, everything looks pretty good, right? And then now we have them at the same granularity. So year and year. So you got 94 records and 91. So let's go have a look. Now we can join these. So we go join. What does that do? Join. Oops. Hang on. Join. Right. And we're going to join the date and the year. All right. So you can see now that's working. We can see that there were 3 records that weren't included: 1927, 1928, and 2020. I'm probably not going to care too much, you know, because I kind of want a macro scale over time. That's really what I want to look at, not necessarily 2020 with COVID. There are heaps of other events in the past where the stock market went down. So let's go and do a output, right? And one thing I don't need is a second year for it. So what we're going to do is we're going to go in here and just get rid of one of these. Remove. Uh, let's rename this unemployment rate, and let's call this S and oh, hang on, what happened? What happened there? That was weird. It's like I accidentally undid or something. Unemployment rate. Huh. Why is that doing it? Hang on. All right. Okay. This is why I don't like doing changes in here. So we're just going to add a step instead. Just do it in here. Let's get rid of date. Let's rename this unemployment rate. And let's call this S&P 500, which is basically the economy. And then we're going to output. And I can see it's actually created a new kind of flow. So what I'm going to do, I'm going to remove this old one, and I'm going to bring this one to the front here. Oh, hang on. Oh, wait, you can't do that anymore. Oh, there we go. You could do it the other way. All right. Now we're going to output this as a hyperfile. I'm just going to put it in downloads. Yes. And we're just going to run the flow and replace, right? And we're done. So we're going to go open that in Tableau now. All right, I've gone ahead and opened that file. So there's a little bit of a pause there. All right, we've got our data sets here. We've got 91 records. Everything looks good. All right, so you'll notice that every step of the way, I'm checking things. I'm looking for numbers, making sure that, you know, the number of rows didn't suddenly become 1,000 or anything like that. I'm inspecting it. Always check what's going on in your data, you know, at every step you can, just because you don't want to do work on incorrect data, because it just eats into your development time. All right, so you can see it goes all the way up to 2019. All right, it's all good. Oh man, my throat. All right, so we're gonna go ahead and visualize this. Let's start with the year. So let's just double click that. I can see it's green, so it's already making a continuous visualization for me. And let's look at the S&P 500. Right. All right, here we go. So is this correct? Well, what I can do straight away is just go online and check if it's actually doing it, right? So let's do that. So I've got it right here, and I've done S&P 500 Yahoo Finance, which I like checking. And let's just check and make sure the overall pattern is the same. Go max, right? That looks about the same to me, right? And the reason you haven't got all those jagged parts is because this is on a, I think, possibly a day scale or a month scale. And remember, we converted ours to year. So ours has smoothed out a bit. And that's okay, because we're going to look at it from a year to year basis. So as a long-term investor, I'm not interested what the market's doing month to month, or even 1 year to 2 year. I'm interested in what's it doing over 5 years, 10 years, 20 years, 30 years. All right, so that's the S&P 500. And I've got two options here. I can either do a dual axis or use measured values. And I'm not going to do measured values. I'll tell you why. S&P 500 value goes all the way up to 3,000. Unemployment rate is on a scale of 0.2, 0.3. It's a percentage, right? So if I put that on a measured value, it's just going to look like a straight line. You can see it's not a straight line. It's just really low. Okay, so let's undo that. I'm going to put it on its own scale. So you can see it only goes up to 0.25, right? Let's actually convert this. And I've got a few options. I can go here, format, convert it to percentage, or to make it easier for me, if I'm going to do future work on this, I'm going to change the default properties on this data set. So how do we do that? Well, let's get rid of this. We're going to unemployment rate. We're going to go default properties, and we're going to go to number format, right? We're going to go percentage, and no, just a single one, and go OK. Now, this is very convenient. So now when I use it, you can see it's percentage straight away. It also means that anywhere I use it, it's always percentage. So I don't have to keep going back and changing the format, which can use up a lot of time. All right, now I've got two of them. Let's put this on a dual axis. right? And now we can see what's going on. In this part here, it looks like there's been almost no activity in the S&P 500 in the stock market, yet the unemployment rates are kind of going crazy. Well, that's not necessarily true because the value here is so high that it makes the lower values look flat, right? So you just got to be a little bit careful with that. And actually, before we get into it, I'm also going to add labels here so that I don't get confused between the lines. And I'm also going to change the formatting of the scale, right? Neat little trick. This orange one is the unemployment rate. And that's actually this right axis here. So I'm going to go in here and go format. I'm going to change this to orange. Bold and okay. That way, like from my mind, I know that the orange is to orange and then this one is the blue. So we're going to change that too. I'm going to go blue and bold. All right. And my eyes aren't that great. So let's make the font a little bit bigger. Let's make it maybe 10. There we go. Getting old, getting old. All right. So let's have a look at time. Let's have a look around here, right? What's going on? Again, it looks like a flat line, but I kind of know it isn't. It's impossible that it was just a flat line. That means it was sort of like the economy barely moved in the US, which come on, it didn't happen. I know already that in the 1930s, you have the Great Depression, so there should have been a drop. You have things happening in 1950s like wars. You got stock market drops in the 1980s. There's a lot of things that are happening. So impossible it's a straight line unless my data is wrong. So what we're going to do is we're going to add a filter, right? I'm just going to go show filter, right? So we've got it here and I'm going to put it at the top. I like putting it here because you have much more space to actually control it, right? So let's go back earlier. So I'm going to look from maybe 1980 to 1930 kind of period. And look what happens to the blue. You see what happens? So if I go backwards, if we go back to 1980, watch what happens to the blue line. Because now you can see it because the scale has changed. One other thing I'm going to do is I'm going to go into the axis here. And I'm going to turn this thing off, include 0. What that basically means is instead of the axis starting at 0, it's going to start wherever the lowest value is. It's going to self-adjust. And that makes it so that if my values are quite high, I can stretch them out vertically so I can see really the movements, okay? So we turn that off, right? And we turn this one off as well, right? Okay, so you can see this line is actually quite opposite to one another. So excluding this kind of early part here, the unemployment rate went down, right? And it kept pretty low, and then the stock market went up. Oh, cool, kind of makes sense. So let's move to the right a bit, right? Let's see if there's any more patterns. Probably in the 1990s, yeah. So you can see here the unemployment rate went not too, it was like sitting at almost 11%. Stock market wasn't really doing anything. And then it dropped. So in the 90s, it dropped. I'm guessing it's the internet, right? I'm guessing the internet created heaps of jobs and then the unemployment rate went up. Okay. If I move to the right even further, all the way up to 2019, that was the internet. This was the global financial crisis. And obviously we've got COVID coming. And you can see that they're almost opposite. So what does this tell us? If I'm looking at it, obviously this is, not investing advice. This is just like an analysis. This is really a Tableau training video. It's not really about stock market. That they're opposites, right? In that when unemployment goes up, you can expect to see that the S&P 500 is going to go down. So as an investor, you have an idea of what causes the stock market to move up or down, and it's kind of the why of certain things. And it's a lot more complicated than unemployment rates, but that's why we have tools like Tableau, so you can analyze other things, because this could create questions for other things you do. And then you do analysis on that, and then you kind of go from there. And that's how you do your investigation, right? So we'll leave it at that. I hope you guys enjoyed this little exercise. Let me know what you think. If you want me to do an exercise on other types of data, please let me know. I'll be happy to. And we'll leave it at that. Hope you guys have a great Saturday and see you later.